The calm before the storm, imagine this. Pause, you wake up, check the markets, and see the ASX climbing higher. Relief, right? Investors breathe a little easier. Portfolios look stronger. Headlines cheer the recovery, but then emphasize a warning shot comes from the Reserve Bank of Australia, a warning that changes the tone completely. The RBA has flagged something big, something risky. And it's not happening here in Australia, it's across the Pacific in the heart of Wall Street. Hey, pause the danger. A massive overdependence on US tech stocks. Now think about it. Tech giants like Apple, Microsoft, Google, they dominate global indexes. They move markets. They shape investor confidence worldwide. But here's the twist. The RBA says this concentration creates fragility. If those companies stumble, the whole system feels it. So while the ASX rebounds, the real story is hidden underneath her lower tone. It's not about today's bounce. It's about tomorrow's risks. And in this video, we're going to break it all down step by step. Why the RBA is worried, what it means for Australia, and most importantly, what you should do as an investor. Her pause ready. Let's dive in. The ASX recovery story. Let's start with the good news. The ASX has been showing signs of life. After weeks of uncertainty, market confidence is slowly returning. Traders are buying. Volatility has cooled, at least for now. It feels like progress. But here's the thing. Recoveries like this often mask deeper problems. Pause. It's like fixing a crack in the wall while ignoring the shaky foundation underneath. The rebound is being driven by a mix of global optimism and local strength. Commodities are holding steady. Investor sentiment is shifting. But the truth is, much of this movement is still tied to what happens overseas. Australia's market isn't an island. The ASX dances to the rhythm of global forces, especially the US, and right now, HAMFOS is heavily tilted toward one sector, technology. Think about it. The NASDAQ, home to the biggest tech firms, has grown into a monster. When it rallies, the world cheers. When it stumbles, everyone panics. So yes, the ASX is recovering, but it's tethered to a giant that may not be as invincible as it looks. Her pause, that's where the RBA's warning comes in. The RBA's warning is where it gets serious. The Reserve Bank of Australia doesn't throw out warnings lightly. When they speak, mark concern, mark pause, a concentration risk. In simple terms, too many eggs in one basket. Tech, the RBA pointed out that global markets have become dangerously reliant on a handful of American technology giants. Apple, Microsoft, Alphabet, Amazon, and a few others now hold massive weight in key indexes. That means their performance can make or break the broader market. Now, ask yourself what happens if just one of these giants takes a hit. A weak earnings report, a regulatory crackdown, a sudden shift in consumer demand. The ripple effect wouldn't stop in Silicon Valley. It would cross oceans. It would hit the ASX. It would shake portfolios everywhere. And here's the kicker. Emphasize the bigger these companies grow, the more fragile the system becomes. That's the paradox. The stronger the giants, the riskier the market. Her pause and the RBA wants investors to wake up to that reality. The hidden risk in tech dependence, let me paint a picture. Imagine building a skyscraper where 90% of the weight rests on just a few pillars. As long as those pillars hold, the building looks stable. But if even one cracks, pause, the whole structure is at risk. That's what's happening with US tech dominance. These companies are global powerhouses. They drive innovation. They create jobs. They fuel entire economies. But they're also overexposed. Valuations are sky high. Expectations are enormous. And the higher they climb, the harder the fall could be. Investors often forget that tech isn't immune to cycles. Remember the dot-com crash in 2000. Back then, everyone thought the internet would only go up. Until it didn't. The RBA's warning is like a flash in wreck. It's not predicting a crash tomorrow, but it's saying be cautious. Don't ignore the risk. Diversify. For Australians, that matters even more because our markets are deeply linked to global flows. If Wall Street sneezes, Sydney catches a cold. Ham pause, and right now, Wall Street's health depends heavily on a handful of tech giants. What this means for everyday investors. So what does all of this mean for you? Pause. Let's bring it down to the individual level. If you have superannuation, ETFs, or global index funds, chances are you already own these tech giants. You may not even realize how much of your money is tied up in them. And while that's been great in boom times, it also makes you vulnerable in downturns. The lesson here isn't to panic, emphasize it's to prepare. Strong financial habits start with awareness. Know where your money is invested, understand the risks, and don't put all your trust in a handful of companies, no matter how powerful they look. Diversification is the key word. Spread your investments across sectors, industries, and even regions. That way, if one pillar weakens, your whole portfolio doesn't collapse. Remember, markets move in cycles. What feels unstoppable today can stumble tomorrow. Smart investors don't chase trends blindly. They balance risk with opportunity. Have pause, and in a world where tech dominance feels untouchable, the smartest move might be asking, what if it isn't? Final thoughts, call to action. So here we are. the ASX looks creeping back. But the Reserve Bank is telling us don't get too comfortable. Cause behind the optimism lies concentration risk, the heavy reliance on US tech giants. It's like a warning bell, not to scare us, but to prepare us. And as investors, preparation is everything. The lesson, here emphasize, don't get blinded by short-term rebounds. Pay attention to the bigger picture. Know where your money is going, diversify your portfolio. And always manage risk as carefully as you chase returns. Because at the end of the day, wealth isn't built on luck. It's built on strategy, patience, and awareness. Softer tone, remember, small steps today create big wins tomorrow. Pause, emphasize, subscribe for more smart money tips, and let's keep building your financial future together.